And as always, we're going to be looking for accurate context, good risk management, and always. And now I've got the broadcast going. I do apologize. I didn't attach the correct link to the studio here. So I do apologize. Welcome back, traders. It's time for the market forecast. It is Monday, November 15th. I'm John. Thanks for trusting me with your time. And we've got the echo because I was already onto the charts. All right, now we've got it all straightened out. As always, it's Monday. We're going to be looking to find good context, risk management, and patience. As always, I always run into some sort of hiccup, and this one was all me. I didn't attach the right things together, and it's Monday, I guess, huh? Well, this morning at 7:30, the Empire State Manufacturing Index came out. This is a general kind of look at how business is doing in New York. Now, they were looking for 21.6, came out 30.9. So apparently things are going pretty well in New York as far as business is concerned. For those of you keeping track of cycles of the moon in your trading, it's a full moon this coming Friday. And an interesting fact, 1867, today was the first use of the stock index ticker. Revolutionized trading, making quotes available minute to minute. Yeah, I keep getting those gremlins, and this one was completely my fault. Okay, so as far as other news this morning, a lot of folks kind of focusing on the meeting between President Biden and President Xi of China. It's not going to be in person. It's going to be probably a Zoom meeting, I would imagine. But maybe they'll get some substantial things done or some things talked about. I've got a few ideas for them. How about trade? How about the saber rattling over Taiwan? And how about we chat a little bit about the coronavirus? Dems this week are going to start probably pushing to get their spending package done. It's been a little bit trimmed, but that's going to be the focus, I'm sure, in Washington this week. And the dollar strength and rollover is keeping a cap on crude prices, at least for now, as well as a potential strategic petroleum release that everybody has talked about. So, as far as anything else, make sure you hit the lucky like button. Share, comment, question, feedback, and heckling are always welcome and sometimes well-deserved. Make sure you subscribe to our YouTube channel so you get notified when we do go live. Look at the VIX just a few minutes ago. It was up 2%, 16.71%. The equity markets got a little bit of a boost on that 730 Empire State Manufacturing number. Not usually a very impactful number, but we are really thin as far as economic releases are concerned. As a matter of fact, pretty much for the entire week. Tomorrow we have retail sales. That might be pretty important. Import-export prices, industrial production. Tomorrow is probably the busiest week. Business inventories and housing market index on Wednesday. Housing starts and permits, and of course, EIA petroleum status report. Thursday, jobless claims as usual on Thursdays. Philly Fed manufacturing index. And then really nothing on Friday, just a couple of talking Feds. And that's it. So we're going to be a little bit lean as far as economic data is concerned. Dollar index 95.05 down a little bit, but still hovering pretty close to that 16-month high, and the 10-year yield off just a little bit at 1.55%. And we will see that 1 minute open. We're just about there. So let's jump into the charts now. And again, my apologies. Always messing things. Okay, so now we've got the sound, we've got the charts. We should be in good shape. This is the daily, it's rollover week. tomorrow into Wednesday, we're going to want to change from December into the January contract. Probably going to do mine on Wednesday, but it's fine either day. It's just a matter of a little bit of a difference in liquidity. Volume and open interest, moot. No real changes. Nothing we can use due to rollover. Monthly, medium time frame balance remains. I mean, we've been in this area for basically about a month, which pushes us into short time frame control. Demand questions as the world still is wrestling with this COVID 30-minute chart. All right. We're just about to open here, so we're going to go to that 1 minute chart in a second. One time framing lower for 3 days, lower highs, lower lows. Last week's low somewhat pivotal, perhaps. And again, this week's weekly kickoff high, 85 even, way up there. And weekly kickoff low, 78.25. Take a look now into the 1 minute chart. Back to the 30 for just a second. Do we open with a gap? Looks like we're opening with a gap, and it looks like we're driving away from the close of that gap and below last week's low. Here's the 1 minute chart. We got about 20 seconds left. I'm hoping that it is going to, yes, it should populate. We've got the Tiki opening range. And we've got our opening range, the high of it, 79.75, the low of it, 79.66. We have not necessarily broken outside of it just yet. Here it is in a much larger fashion. And it looks like we're just about to take out the low, and there it goes. So without the gap close, with the opening range at the high of the session, this might be a decent opportunity. The market is showing lower lows, lower highs, got the opening range at the high of the session, and a lack of gap close. Could be an interesting one for us. Okay. To the S&Ps. We've got an interesting situation in the S&Ps this morning, ladies and gentlemen. We put in a late spike at the end of the day on Friday. This bull flag we broke out of on Friday continued to push to the upside. Good volume, an open interest increase. We had negative delta the better part of the day, which would indicate possible longer time frame buyers in this market. Short time frame nuance important, and that nuance is the late spike. Here's the 30-minute chart. Well, let's take a look here first. Weekly kickoff high 47.10 in last week was resistance, may still be resistance. The low 45.99 all the way down here. We've got some points of control down below with which to look for and to check. We don't have anything up above. It looks like we're going to be opening with a gap. Here's our late spike. Okay, so the market didn't have the opportunity necessarily to accept that price over time, but it's going to open above it, which is a sign of acceptance. The base of the spike is basically 46.76 right here, the base of this bar. And then we've got the afternoon pullback low, which may also be an important area to look at, which is 46.67 if given the opportunity. Looks like we're going to open with a gap. The 730 number, the anticipation of it, I would guess, pushed us a little bit higher. We're going to be open with a gap. Can't close the gap. We go in the direction of the gap looking for longs. If we get to the opening, if we get to the late spike, this is a high target area. Doesn't mean anything has to happen at all. Nothing has to happen right away. Stay patient. Look for your good opportunities. We've got overnight longs. If we can't close the gap, we can't take out these levels that we just discussed. The base of the late spike again is 46.76. The afternoon pullback low, 46.67. We're going to be looking for opportunities to continue this market higher. All right, into the Nasdaq. Weekly kickoff high for the Nasdaq 16,500. Weekly kickoff low 15,824. Very similar situation without the late spike. We had the bear flag, the bull flag. We broke out above it on Friday. We had no real big change in open interest. By the way, in the S&Ps, we did add 9,000 in open interest on that move above that bear flag, or bull flag, I should say. We lost 300 in the Nasdaq on this push to the upside. Volume wasn't bad, wasn't good. The difference is, I don't know if it's going to make much of a difference if we open with a gap and we can't close the gap. We didn't really necessarily have that much of a late spike. There is a bit of a late spike. Neither of the late spikes hold the settlement price. Well, I guess it does in the S&Ps, but not necessarily. Oh, come on. Not necessarily in the Nasdaq. Okay, settle down. Whoa now. Whoa, Nelly. Whoa, Nelly. So we've got overnight mixed. The market opened here. We've been holding above that level, but it's been very kind of sideways, which kind of works well to even out inventory, just like a move in the opposite direction. We got our push to the upside. We're going to be opening with a gap. If we can't close the gap, we're going to be looking for opportunities in the direction of the gap. Now we've got a couple of levels here as well. You know, we've got our late spike, which kind of comes down to basically settlement. So settlement is 16,192.75. I'm going to use that for the base of the late spike. And we've got our afternoon pullback low here in the Nasdaq as well, which is 16,157. 16,157. Do we have any high volume nodes with which to look at? Well, we've got our point of control from yesterday, I should say Friday, which is really the only high volume node that we're going to be looking at or focusing on early in the session. If we can't hold above the high and we come back in and we accept back in range, these volume nodes could come into play. The value area special situation says that if we open outside of range and value and reaccept inside of value from Friday, there's a probability that at some point in the session, the price could come all the way back down and test value low from Friday. Nothing happens exactly the same. Nothing has to happen. It's just all about the probabilities. Okay, let's take a look at the gold now. We had a pretty decent move last week, didn't we? Like a $100 move. Are we going to continue in that direction? Well, Friday we still had some decent open interest coming into the long side. We still have buyers willing to come in. Indication that there's a potential slowing of momentum for the time being that is present, balanced, possibly forming 1, 2, 3, perhaps a little bit of balance here. It's okay. We just need some new business to come up and push this market higher. Weekly kickoff this week, 1910 on the upside and 1798 on the downside. One-time framing, all those showing some signs of potential slowing of momentum. What's the 30 look like? The 30, nothing. We've got the market opening higher, coming back into range, back into value. We're in the middle of the value area from yesterday, Friday, I should say. No real push or urgency for me to start looking for opportunities here. I'm going to stay patient and just let the market come to me. When it comes time for an execution, I'm going to trust that I'm going to know it. And right now, inside value, no real overnight inventory left with which to play with. Stay patient. All right, let's take a look at the euro. Okay, so long time frame downside structure is intact. We got lower lows, we got lower highs. We've got weekly kickoff high in the euro of 115.98, weekly kickoff low in the euro 113.05. Expanding the weekly kickoff now to the downside. Open interest still increasing to the downside. We added 2,300 on Friday on lower volume, but the open interest is still indicating that there are still traders out there willing to sell into this market. Starting to look a little bit like it's losing some momentum. We've got the 9-session hull moving on average below price in the daily chart. That can be a sign of it. Our last week's low is going to be somewhat pivotal for us this morning, the 30-minute chart. What's it tell us? It tells us patience. Patience. We opened here. We're basically there. Settlement. We're in range, largely in value. We get a test down to the overnight low or last week's low that could be worthwhile just for the fact that it can help us limit risk. But this last week's low would appear to be somewhat pivotal. And to the 10-year and the natural gas. Here's the daily on the 10-year. We had a pretty decent boost in open interest and a little spike in volume, but not tremendous volume off the low from Thursday. We added 32,000 in open interest on a push off the low. Does that mean that we're going to be turning anytime soon? Probably not. That's not huge open interest for the 10-year. Still short time frame balanced, short time frame controlled. Take a look at the 30-minute chart here. Weekly kickoff high. I should point those out for us. In the 10-year, 131 and 30 seconds. On the downside, 130 even. So we've got some visuals on both sides of the market. We've got a couple of points of control in last week's low down below here. We've got Wednesday's point of control, and lots more up above, lots of space up above here. But the market opened, had a little bit of long overnight inventory. I think it would suffice to say that has now been reconciled all the way back down to settlement. Our overnight low is no, that's not our overnight low. So we just took out the overnight low, but we're still basically in range from Friday. If we can't hold range from Friday, get into value from Thursday, that could bring us to a move to come down and check point of control from Thursday, and perhaps a check of the overnight or the last week's low. Are there really good ideas and things to lean on? Are we looking for bigger opportunities here? At this point, I'm going to go with no. It's Monday. Take your time. Be cool. Be calm. Let's take a look at the nat gas. So there's a couple of interesting things about this. We know we're coming into winter, and yet prices have been kind of drifting to the downside for about a month. We've got about a 3-day balance beginning here. 1, 2, 3, kind of in the middle of it here. We've got overnight low, weekly kickoff low, supportive in the overnight. We've got our hulls indicating perhaps a slowing of downside momentum. We're range bound, probably short time frame. We lost 1,200 in open interest on this push down to this level last week on Friday. Volume was pretty decent. It's going to roll next week. So we're falling into a similar situation because nat gas has so many contracts that are traded out into the future. It's going to be very difficult to gauge volume and open interest because, again, it's in rollover. It's another one of those products that rolls every month. So Just kind of looking at last week's low and weekly kickoff low, just for the fact that they can limit risk. And the fact that the hulls are now below price tells us it may be an opportunity for us to start to look to buy this market on weakness as long as we hold that weekly kickoff low. Take a look at the 30-minute chart now. Where are we at? We had some overnight shorts. This is where the market opened last night. We had some overnight shorts. They've now been reconciled, which puts us right back into value area from yesterday, and another suggestion to take your time today. There's no reason for us to feel any urgency to try and get into this market. Watch, see what happens. Stalk like you're a lion looking for a wildebeest. And when that wildebeest comes a little bit too close, then pounce. If you go looking for trades, you're probably going to find them, and they're probably not going to be the ones that you're going to be favoring as the day goes on. All right. So in perfectly imperfect I just did that, didn't I? Not sure you guys can see me, but I just closed out that. Let me see. Looks like we're still going. Huh. Hey, we are. Oh, there it is. What a goof. You know, in perfectly imperfect fashion, as I was saying, I think we've got out. I think we got through with this forecast. It's Monday. Expect the unexpected. Trading cattle. Wow, I haven't traded. I haven't been involved in the meats since I was a runner, 1983, 1984. Subconscious. Hopefully that 1 minute crude oil was good for us. You know, see if that held. Nope. No, we've been both sides. We're just kind of open auction on both sides of it. Now that does tend to happen. All right. Charles, I think we got the volume nodes for Nasdaq. Spencer, how do you calculate open interest changes? I just caught the changes on the two front months together, and that's more than 90% of the trading volume. Yeah, so Spencer, I will tend to use the total number. If you look at the CME bulletin, look at the bottom. It says totals for CL, totals for ES, whatever product you're looking for, and those are the numbers that I look at because, you know, especially in crude oil, the open interest can be moving around in those different months. So I collect all of that. Broke out of a giant wedge on the weekly chart in GC. Yeah, we were looking for a big move, and that weekly chart isn't something that we necessarily see on the market forecast, but it's something we're always looking at, hopefully, on any product we're trading. Technology is a mystery, yes. My advice is gold. Well, I would hope. I hope so. I'm just, you know, our goal is to help you find success. If we do that at all, if we help, that's what makes this so beautiful and so much fun for me. I'd love to see when traders are improving and doing well and reaching levels they haven't reached before. Yeah, Spencer. Here, let me. So I'm going to put this back on the other screen here briefly so we can take a look
at that. Okay, so here's energies. First one's going to be crude oil. This is the preliminary. Okay, we always want to make sure if we're collecting this information to wait for the final. The final's not out yet, so I'm going to make this big so everybody can see it. But here's all the open interest. Here's December. Okay, there's 169,000. January's already 356,000. But all the way out until, well, here's December of 25. I mean, that's 8,200, 29,000, 18,000. There's a lot of open interest that's bled through the entire number of open contracts. So I'm always going to total CL, total volume, total open interest, and net change. Hopefully
that helps. Okay. All right, that's going to be it. Sorry about the usual technical difficulties. Take your deep breath. Stay humble, grateful, and creative today. Looking forward to seeing everybody in group coaching at 1 o'clock. Email in your questions if you can. Otherwise, just go ahead and ask them in the fly. Nobody knows everything. I know I certainly don't, but we're going to do our best to learn together. So get out there and profit. Trade well today. I'll see you in the pit in a few minutes, the metaphorical pit, that is. And we'll see you at 1 o'clock. Have a great day.